Josh Kumar Hernandez, CDN Podcast. James Passin today, hedge fund manager, Daredevil investor in all kinds of different precious metals, and you've got an incredible background, James, in all different kinds of areas. Let's start off, though, with rhodium, which is something we've been talking about the last couple of years. I know that you helped Scott Travers and John Albanese. You said that they should invest in rhodium. They did. They made a nice profit on that, and the question we want to ask is, what inspired you to suggest to them that they invest in rhodium, and what were you looking at when you made that prediction that would go up?
Well, I've been following very closely the platinum group metals for, I guess, at least two decades. Mm-hmm. And I'd actually been following rhodium as well as its sort of sister metals, palladium and platinum, quite closely in the previous decade. And so I was just tracking palladium, platinum, and rhodium. And what I noted at the time that I started speaking to Scott and John was that rhodium, firstly, was approaching absurd levels. Like it was getting underneath $700 per ounce in the spot market, down from a high of $10,000 an ounce. And that there was really no fundamental justification for this decline. And if you look at the supply side, you're talking about a very sort of fragile production profile. There's rhodium that doesn't exist by itself. I mean, usually rhodium is produced as a byproduct of platinum production or palladium production. So it's usually found together with those other metals. So in order for rhodium to come out in the market, there has to be some platinum group metal producer that is producing it. And the main producers are in South Africa and in Russia to a lesser extent. I used to be on the board of directors of a South African mining company. I have been investing in South African industries for several decades. I have a lot of deep connections with very knowledgeable people, and I don't particularly have a constructive view on the South African mining industry because they're facing structural issues with disruptive black empowerment legislation, very strong militant labor unions, and just fairly high cost structure. The Bushveld complex, which is where the platinum group metals are coming from South Africa, there are targets, there are some new deposits are probably going to go into production, but in general, it is quite limited in terms of the ability, just from an engineering perspective, to expand production there. And if you take just a neutral stance on South African production, it's just hard to see how there's going to be enough rhodium to supply the needs of the world. Mm-hmm. On the demand side, this is my observation several years ago when I spoke to Scott and John and we put this trade on. On the demand side, actually, at the time, and actually I'm still quite constructive. Because the principal use of rhodium is in catalytic converters.
Which we all have in our cars.
We all have, but where the growth is starting to come from is in China, and behind China, other developing countries. That as the emission standards tightens, they have to have catalytic converters, and they have to use more precious metal catalyst, platinum group metal catalyst in terms of the catalytic converter manufacturing. And in fact, China has a new emission standard that's imposing that, at least in my view, and the view of some analysts that are far more knowledgeable than I am, but that the China demand is going to ramp up significantly. But this fact of, firstly, overall robust global growth in gasoline motor-based automobiles and the accelerated growth in China, that fact has been masked, at least emotionally, by the electric car sentiment. There's this because of genius of Elon Musk and Tesla success in creating a commercial electric car product, and now other large automobile companies coming out with their own EVs with this EV story. that sentiment has been very negative towards catalytic converters, and I understand the emotional reason for the sentiment, but I would posit that if somebody truly analyzed the true environmental impact of electric vehicles, and the true cost of creating cobalt lithium rich batteries, disposing of batteries, and the cost of generating and transmitting power, that electric cars overall are net destructive for the environment. I mean, that's my view, but that is irrelevant to this investment thesis.
Sure.
But the electric car sort of bubble, if you call it that, that has been soaking up money, which is going into other areas that are more relevant to that story. And so that left sort of this negative sentiment towards rhodium, and which I think at the time, my view was it was misplaced. And then the other thing which we looked at the time with rhodium was that we were at really the tail end of the it was the final domino to fall from what happened in the previous decade, when Russian traders jammed up the rhodium price to $10,000 an ounce, and there was a lot of reasons for that. I don't know the details, but it was rumored that one of the Detroit companies that had replaced their trading desk with very young traders, and so they were just going in the spot market to buy rhodium every month, and eventually, the rhodium price, they had to pay $10,000 an ounce, and that sort of mini bubble that sucked in, obviously all this rhodium sponge, like anyone that had any rhodium would come out, and the automotive manufacturers, catalytic converter manufacturers, everyone was in such a state of shock that there was, in general, a big rotation away specifically from rhodium palladium mix back to platinum for a time, because they didn't want to be beholden to rhodium. And then after the palladium price crashed, and it was quite cheap for a long time, then there was a rotation back into palladium rhodium. So these rotations are very slow, and it's always at the wrong time. These are not great. These car companies are not great traders.
Right.
But I felt that the situation is right for a rotation back, because palladium's quite expensive. So you could see a rotation back to. Well, I mean, at the time I was thinking, palladium and rhodium could you would get a rotation back to palladium rhodium, but now palladium is quite expensive, and rhodium, of course, has gone up a lot. So we started to I started to reassess, but at the time we looked at rhodium, it was a forgotten metal. It had completely crashed. It was washed out. Nobody cared about it. But it had very strong fundamentals. Sure. And all it would take was some lonely voice mentioning their affection for rhodium, which actually was my voice, and the price started to recover. But the great thing about buying a commodity that is needed for some kind of industrial application that is very difficult to substitute is you have a real buyer, not just financial investors or speculators, but you have like an actual consumer that needs access to it. There's other elements where you can recycle rhodium from old catalytic converters. So an important question is, if you assume the average life of a car is 10 years, what type of metals were they using 10 years ago? Because that could be impacting their recycling market. But again,
to come,
yeah.
Right.
So these are the kind of things you need to be on top of. So that's the rhodium story. Well, I'd say at this moment, I'm out of rhodium. At this moment, I like platinum. I think platinum is extraordinarily cheap in terms of its relative price to palladium, its relative price to rhodium, and it's one of the main products of for example, the Russian platinum group metal producer Norilsk. This platinum price, I think there's starting to be a real, potentially supply disruption, from mine responses. A lot of the platinum group metals producers in South Africa are quite fragile, and you could. So I think overall, I think palladium, platinum, rhodium complex could go up a lot, but I feel that platinum has has the most torque. And now that automotive companies have a huge incentive to rotate back to platinum because it's so cheap. In general, over time, there has been a positive correlation between platinum and gold. I actually recently did a sanity check. I walked into Tourneau luxury watch retail store in Manhattan, and to the Rolex counter.
Oh.
Just out of curiosity, I wanted to price the platinum Rolex against the gold Rolex, and the platinum Rolex, basically the same watch,
right?
But it's materially more expensive than the gold Rolex. And the salesman said that the platinum Rolex is never cheaper than the gold Rolex. It's a nice deal for them right now. But platinum historically is traded at a premium to gold. It is also has had a monetary role for several centuries, and it's been a symbol of wealth, in even like ancient Egypt. And,
4,000 plus years.
Yeah, so
right.
And there are countries that mint platinum coins. So there's platinum does have some role as a monetary instrument. It has a very important industrial applications, and then also there is a technology story which might kick in potentially. And I can't say that I have super high conviction that this will play out in the near term. But possibly the hydrogen fuel cells could become an important story, and that's an alternative, environmentally friendly automotive story. In fact, the byproduct of fuel cells is water vapor. So I think potentially hydrogen fuel cells, if they can solve certain issues, that the hydrogen fuel cells could potentially really dwarf the electric vehicle story, potentially.
Right.
And most of the commercially viable fuel cells use a platinum group metal catalyst, for example, platinum. So if the fuel cell story were to take off, and it doesn't even have to be automobiles, it could be other things requiring power, but if that takes off conceptually, with a hydrogen-based economy, then you could see this technology story where the same kind of buzz that is affected lithium or cobalt could affect platinum. So
the sky's the limit in that case.
Sky's the limit, yeah. So I'd say I don't see any downside to going long platinum. There's a lot of upside, and that's. And so if you look at the platinum gold ratio, it's way out of whack. I mean, now of course it could stay this way for decades. It could stay this way forever. Right. I mean, these historic relationships don't necessarily have any predictive power. But I would say that one could view platinum as a high beta play in gold. So if you think, okay, gold's going to maybe go up, platinum will probably go up more than that. And if it recovered its premium to gold, then there could be fantastic torque in platinum. I'd say the only negative thing about platinum is there is positive correlation between, at least I've noticed recently, between the platinum and the U.S. stock market, because it has this industrial sensitivity. Not necessarily it's a negative, but if you felt that there was going to be some crisis, platinum could have more downside than gold, because you could see the actual demand destruction. Conversely, though, there's real industrial demand. So if that doesn't happen, then you've got actual net buying. So platinum is my play. I own some platinum, and I think I'm holding some investment bars. I think the premium is quite modest, and it's actually just a very dense metal. It's a great way to store value.
It feels good in the hands.
Yeah, it feels great. It looks great. And the platinum coins, I'd have to say that like the Canadian maples, that their premium is quite low right now. I've picked up a few, so I picked up some platinum coins as well. So I can't say that I feel that platinum is the next rhodium, but I think the risk reward, it's a no-brainer for me personally.
Well, obviously you use a lot of technical insight and critical reasoning to make your analyses on obviously rhodium, platinum, palladium. A lot of our listeners here at CDN, of course, follow gold and silver quite a bit as well, with coinage especially. And I know that you appreciate gold coins, not just for their precious metal content, but you appreciate rare gold coins and such as well. We've seen a flood of double eagles on the market the last number of years coming in from Europe, and we've seen the premiums go down significantly, especially on the sub MS65 pieces. What are your thoughts on that, James, on both the kind of numismatic level, but also on the precious metals and technical side? What do you see happening now? What should we be looking at in the months and years ahead?
I've been tracking these the premiums on these coins for some time right now, and I think it's really, we're at a very interesting moment where, on the one hand, based on the information that I have, or at least that reasonably informed people in this industry have, the supply of coins coming out of Europe is immense, and it's going to take an unknown period of time for the market to digest. So it seems unlikely that the premiums could run away. And there could even, I could see the view to say, just get rid of them because these premiums are stuck. But on the other hand, we know what's driving these premiums down, and these premiums for some of these coins in particular, if you look at, for example, coins with the CAC sticker, mid-stage 65s, even the premiums are just so low that I just think it seems like a great value. But anyone that would purchase these would have to have the view that they need to wait because because unless somebody has the power to pick up all these coins and take the inventory out, this relentless flood of coins is it'll depress the market until it's eaten up. But over time, especially some of the junk coins that are coming out that I've heard are getting melted down, turned into bullion. At some point there's going to be a coin shortage. And
it's just logical. There has to be.
It seems like a great time to cherry pick your moments, look for ad hoc opportunities to kind of build up an inventory, which is what I'm doing personally. So I think it's a very exciting time to be buying these coins, but you need to have an adequate time frame to ride it out. Then I would say if you take a broader view on gold itself, I don't have no one has a crystal ball, but I don't have a particularly constructive view on gold right now, primarily because of the monetary policy in the United States. You have this gradual reduction of quantitative easing, some calling quantitative tightening. You've got the Fed hiking interest rates. It's very rare when you'd have gold price going up against the U.S. dollar in that environment.
It kind of defies historic
and you
trends.
Still have, Europe's a mess, so you still have loose monetary conditions in Japan and Europe, and then you have tight monetary conditions in the United States. It can't be a good environment for gold. So I don't see that, it doesn't seem likely to me that we're going to see some huge kind of massive move higher in gold. On the other hand, it does seem very cheap, and its price is low enough where there has been, especially with the higher cost gold mining companies have had are not having an easy time. It seems like this is setting up for a move higher. The gold market will resolve to the upside, but could it go down further? Absolutely, but I just don't see. On the one hand, I don't feel gold is so distressed that it's a screaming buy. On the other hand, I don't see. It's hard for me to, really see much happening. I think gold probably be range bound, but for technical reasons, it could fall, it could go up.
Sure.
I think the coins, if you can wait it out for the premiums to recover, that seems like a better buy because you have the upside of the premium recovery, and got a reasonably cheap gold price, but again, there's no catalyst, and so it's difficult to buy something without a catalyst. I
think back to your early point too. You mentioned, of course, those who cherry pick their coins, such as MS65, CAC approved coins. Those are probably the kinds of things that people should be looking to buy if they really want to cherry pick nice pieces, right, James? I mean, they should be looking for the very highest quality they can be able to afford. Scarcer dates, obviously. I mean, is that what you would suggest to the average buyer?
I'm not an advisor. I can't.
Sure.
I'm not a numismatic expert. I
Right.
defer to experts like Scott Travers, John
Sure.
Albanese. But what I'm doing personally is exactly that: cherry picking, waiting for something to come on the market. Premiums really low, and I think it just makes sense, because if you don't need access to the money, you can tie it up,
Right.
wait for the premiums to recover. That they will recover eventually.
So a long game investor probably will stand very well in this situation.
Yeah.
It sounds like.
So absolutely.
Yeah.
I mean, for me, the alternative to buying such a coin would be to buy equity in a mining company. But the problem with equity in a mining company is that these companies cost money to run. You have cash bleeding out. You have the companies, the people that are running the company and the board, the executive team, they're being compensated. So you have dilution through options. So you have leakage of equity value and cash that's going over time from the minority shareholders to the people running the company. And of course, you can have activism and shareholders mobilized to change boards, but it doesn't matter who runs someone is going to be extracting cash from the company. It's just I'd say that if you want to take a long-term bet, that just having some tangible asset that is where no one's charging you money other than whatever it costs you to store it, that really is providing that connection to gold. It is gold, without having the risk that other people are eating away at your basically your principal.
Sure.
That's not to say you can't make money in mining equities, and friends of mine run mining companies, and I invest in mining companies. But I think that for me, I just think the torque is in these very low priced gold coins. That's at this moment. You mentioned silver.
Yes, that was the next, obviously, silver elephant in the room is what do people who want to look into buying silver do? Because looking at technical aspects of it, looking at the numismatic side, we've seen, of course, with gold, the same thing. Last few years have been very up and down. We can't quite get a fix as to where it's going. What do you see, James, based on your analyses of silver, that you would like to talk about?
I would say that personally, I hate silver. The only time I liked silver when it was under $5, and I did buy some at about $4.80.
Sure.
Through Perth Mint silver certificates, which is a huge win.
Sure.
But should have bought more. Like right now, I think there's a lot of problems with silver. But I think one of the main problems with silver is, firstly, the premium on these silver coins is ridiculous. It's very high. And when you look at these near historical premiums on gold coins, and you get comparable silver coins, the premiums are very high. They don't make any sense. You're trading so far above melt value.
Right.
I can't see any rationale to buy silver coins at all. Of course, there could be particular collections or ad hoc opportunities that, based on one's knowledge or whatever reason or rationale that you know more than the market, you can buy it. But then you say, okay, what about like just buying junk silver coins or or silver bars or something? The problem is that the silver is such a low value commodity. It's the amount of space that you need to store any reasonable amount of wealth in silver is so big. Like the cost of storing it, you have to pay for the storage one way or the other. Whether it's at a bank vault, whether you have your own secure facility and some bunker, there's some cost to storing silver. And even just transacting in it, like when I've transacted in silver coins, it takes so much time to go through these stacks of coins, and, rake through the boxes, and just the bulk of moving it. And so the practicality of using silver as a monetary instrument is impossible. It is too low value to serve as a commodity, in my view. And I know this is not a popular view because they call it the poor man's gold, and there's all sort of emotional reasons that people want silver. But I just don't feel that it's practical as a monetary instrument. So, okay, there's some industrial applications. The real demand comes from investors.
Right.
And I just don't see how silver competes with gold. But from a technical point of view, what I've observed is that any short-term technical pattern in silver is you should treat it very skeptically because it has so many fake breakouts, upside, downside.
Right.
So many people get tricked by false technical signals. Whatever system they're employing, whatever technical tools they're using, silver is very tricky. So I ignore sort of short-term silver movements as being either irrelevant or even misleading. Mm-hmm. But longer term, you look at if you look at the decline of the spot silver price from the Hunt Brothers peak,
1980.
Yeah, 1980.
Right.
You look at that round trip and the magnitude of that decline. Like we're nowhere near that decline today from the last run up in silver. When we had silver jam up to what was the peak?
2011. It was. I want to say it was $49 an ounce, roughly.
So we have more to go down to match the previous decline from the magnitude of the decline from the Hunt Brothers peak. Now again, not that pattern has to repeat itself, but
But trends matter.
Yeah, and if you look at the symmetry of it, I feel that there is long-term technical downside. Maybe silver needs to retest that level. Why would it do that? I have no idea.
Right.
So for me, silver is useless as a store of wealth. It's useless as a monetary tool. I don't have bothered to really look at the fundamentals that closely. I don't see any compelling long-term technical story, and the short-term technicals are irrelevant. So,
sure.
So for me, I don't like silver. Now that said, if there's a particular opportunity, the particular coin that is scarce, and there's a motivated seller, and I own some silver coins, in fact, and I just I look at them, but I don't spend much time on it.
Right. That's interesting. And of course, we can't, in this 21st century world that we live in today, talk about investments without cryptocurrency, which we all have been aware of the last couple of years, Bitcoin especially. And you have some insights on that too, James.
Well, I think it's very relevant to look at crypto in the context of a discussion regarding gold and silver and money in general.
They'll tie together.
Yeah, I mean, what cryptocurrency represents is a alternative monetary system, and it's an alternative monetary system built on pure mathematics. And the elegance of that, and in fact the extraordinary genius in the mysterious and unknown inventor, author of the Bitcoin white paper, the person responsible, or a group of people responsible for the genesis block of Bitcoin, the genius of that creation, we're still seeing it playing out. And I don't in all these numismatic publications, you see all these articles about the death of cryptocurrency, the death of blockchain, the death of Bitcoin in the mainstream media. In fact, there's a chart I'm tracking of death of Bitcoin articles, and it's like the bubble that's taken off. But Bitcoin's been around for 10 years. That is a long time.
It is.
At 10 years, you have something, and you have this monetary. You have money. You have this sound money that is being used all over the world as a currency that has billions of dollars of daily liquidity. I trade crypto, and what I can tell you is that there's more liquidity in the crypto markets than in the equity markets. I used to trade large blocks in the New York Stock Exchange. I'm more comfortable trading in the crypto markets.
It's interesting.
And you have also the ability to use crypto to buy and sell things. I've used crypto to pay for things. Crypto is so easy to send. It's so much lower cost than using banks, and you don't need to have an intermediary. You don't need to have a trusted third party. And so when you ask, if you ask yourself, well, what is really that drives somebody to get involved in gold? It could be that they're attracted to the appearance of it, or other emotional connections. But I'd say most of the people that I've met, one way or the other, have an appreciation of sound money, and a view that the fiat money, that the fiat monetary system is corrupt, and that the ability of governments to monetize their debt, to print money, to inflate away, basically use inflation as a tool of wealth redistribution and social control, that is in fact the genesis and maybe origin of a lot of ills that are afflicting society, corrupting culture, and creating an ultimately unsustainable economic bubble that if it does crash, which I think it's someday it will, will spark something worse than the Great Depression. And there's no longer any tools left for the central banks to fight it because they've used their bullets. And that's what drives people to gold. But we're in a digital world right now. Everything, all of the economic activity is moving onto the internet. Amazon's going to be the largest market, I think it is the largest market capitalization company in the world, or is near it, because everything's online now. All the industry is going online. And so you remember during the dot-com bubble, we all talked and laughed about how the internet was a bubble, but look at Amazon. Amazon's market cap is greater than every internet company in the world was at that time during the bubble. Right. Its impact on the world is so much exponentially larger than anyone could even imagine at that time. Or Google, and you look at these giants that. And so to say, okay, well, there's some scam internet companies and everything's going to collapse, that was true, and that did happen. But that didn't undermine the actual importance of what was happening, which was a transformation of the world.
Right.
Bitcoin's been around for 10 years. I trust in the mathematics and in the consensus protocol. As the fundamental concept for creating a monetary platform. So in the Bitcoin, we know that there will ultimately be 21 million Bitcoin outstanding. So you have a hard monetary platform because you know the end game. We don't know how many dollars there are going to be, or how many RMB, or how many euros, how many pounds or yen, but we know how many Bitcoin will exist. So you can look at, people say, oh, well, it's too volatile. But if you look in general, like there were weeks when the volatility on Bitcoin is lower than on the volatility in the S&P 500. And now that you have over-the-counter derivatives that on Bitcoin, you have exchanges and backed, which is going to be Wall Street backed a Bitcoin exchange. You're getting the derivative products where traders can sell volatility on Bitcoin. Selling volatility on Bitcoin is super important because that will actually reduce the volatility. In fact, most financial instruments tend to see volatility compress, especially as high-frequency trading and all these algorithms. These traders generally want to be short volatility, and if they're selling the volatility, the volatility is going to tend to compress, which just means that there should be greater confidence that this is not as volatile as it was before. Now, Bitcoin's not perfect, and I hear this argument, and people argue with me that, well, Bitcoin wastes energy. That Bitcoin there's so much energy, it's more energy spent in Bitcoin mining than on some small country. Well, if you look at Bitcoin as a decade-old, successful global monetary system, so that's the question: how much energy is wasted maintaining the U.S. dollar as a world currency? I mean, if you look at the trillions of dollars spent on the military industrial complex, on this global war machine, on this global apparatus that is necessary to maintain the U.S. dollar as a monetary system. Even the amount of energy that's wasted mining gold, if you look at it that way, but that's a deflecting. The question itself is I think deflecting away from the more fundamental question, because you don't even have to have mining as in the sense that people think about in order to have a cryptocurrency. So there are proof-of-stake cryptocurrencies like EOS, which I quite like, and EOS is it's based on different. It's not based on mining. It's delegated proof of stake. We don't have to get into the technical details, but the energy efficiency of that system is radically different than Bitcoin. And Ethereum, another well-known cryptocurrency, on the roadmap, it will eventually move into proof of stake, a different type of proof of stake than EOS, but that'll be a lot more energy efficient than mining. So this complaint about the energy efficiency of mining, first of all, that's some kind of environmentalist moral objection. It has nothing to do with the utility.
Right.
But secondly, I think it's false. But when you look at the ability to take cryptocurrency, to spend it, to transport it, when you start to really think how easy it is to send crypto from one wallet to another, to have a hardware wallet or a hard drive and you could have $1 billion on a hardware wallet, with no costs. You can move it anywhere in the world. You would talk about the gold. Like, how do you move physical? How are you going to drive $1 million, gold across the border into Canada? Crypto's where it's at. That is the new gold. Crypto is so much more easy to transport. It has more usefulness. And it is a store of value in my view. Now you could look at, I think, and if you broader, you can say, okay, well, what if, another thing, one something to worry about is, okay, what if what's called quantum computers, quantum computation can crack the privacy architecture of these networks, which is a real concern. But if they can crack that, they can crack every password in the world. Now, that probably will happen. But the great thing about, at least one of the great things about the cryptocurrency industry is it's pure unfettered capitalism, survival of the fittest.
Interesting.
You've had altcoins crash 90%, in some cases 95%. You've had scam tokens with failed companies. You've had major exchanges fail. No one runs to a central bank for a bailout. The industry fixes itself. The capital gets redistributed. People that took speculative risks get wiped out. But the community survives, and without any support from any government or any multilateral financial institution. And that's why I think a lot of governments hate it. Is that ultimately that you have the purest example of capitalism ever. But aside from that, you have the true utility of cryptocurrency and blockchain technology, which is not simply as either a speculative vehicle to gamble, which is nice. I mean, it's fun to make money if you're lucky enough to catch a good trade, and not simply as a novel form of a new gold, but more fundamentally, in my view, it is the foundation of a new world system, a system based on decentralized governance. And this is very important because as the whole global economy becomes more and more digital, and in fact, as all of our identification and culture, everything's migrating online, and the systems of governance are all moving online, and then as people start to consume things like virtual reality, and this link we have to the physical world is in a way starting to be distorted or severed or fundamentally changed. As this evolution takes place, what the cryptocurrency offers is the ability to create a base layer of the digital world that is based on value at risk, as opposed to a base layer that's based on everything being free.
I see.
So the free model is the Google model, or Facebook model.
Right.
You can sign up for free. You can search for free. You can get free email. But what is the cost of this? What's the true cost? Well, you become
nothing is free.
Your data becomes mined
by
algorithms, and the ultimate powers behind everything start directing everything in a way that our own knowledge and our own history, our own political processes are being changed, possibly permanently, and that even our knowledge of history of what is being corrupted by this, essentially by these technology cartel, technology cartel, and then on the basis of this free base layer, they extract trillions of dollars of rent, and they are, in my view, they're enslaving the world basically. And on that base layer, you can't really build anything that is not beholden to the corporate interests. And we're starting to see the impact where people have lost all control over privacy. They've lost essentially their sovereignty. They've ceded it to corporate powers. So my view from somebody that does care about sovereignty and freedom and liberty, this power grab by the tech cartels is probably one of the most little known coups in the history of the world. And with the potential to change that is what cryptocurrency represents, because it can create a base layer where there's some micro transactions, so you don't need banks, you can do things peer-to-peer, but you can create a base layer where everyone bears the economic cost through, for example, the inflation of a token.
Oh.
And the community, the consensus protocol, through voting, determines how things like work. Mm-hmm. And on that base layer is if you view it as a global operating system, that the world's computational power is being utilized to create effectively an uncensorable global supercomputer that is controlled by the people. And the applications are coming. And we're going to start to see these decentralized applications. And if it catches on, these decentralized applications might possibly, if they catch on through not through any moral, not because of any moral or not through any kind of emotional benefit, although they should, but not because of that, but because of the financial incentive. Because you can create these tokenized models where the economic value in general is flowing to the users of the network, the people contributing to the network. Mm-hmm. So the cost is inflation, and the benefits flow to the network users as opposed to the corporate masters. So this then redirects the entire flow of advertising revenue. Wow. And if that takes off, then I actually think this battle may be the most important battle in human history.
That's interesting. And of course, we've covered everything from the palladium, rhodium, gold, cryptocurrencies. If there was one final parting nugget of advice, not that you have not doled out so many great pieces already, but if there's one thing that you would want the beginning investor to know that we have not covered yet, what would that parting advice be now, James? Any last piece of advice or a tip or something that they should be looking for in general?
I would say that my most important piece of advice is to not take advice.
Right.
Don't take advice. Don't take tips. Don't look for some mentor. Do your own research. Follow your instincts, and don't be afraid to have a conviction.
That's awesome. James, I can't thank you again for this crash course in investing. We were real glad to have you here and hope to have you on again sometime down the road. James, thanks again.
Anytime. Thanks.
Take care.